Hello, traders. It is Tuesday, July 28th. We're 2.5 hours into trading. Market's not giving us a whole lot to look at. Let's see if we can find some day trades. Let's do some market analysis, kind of get a lay of the land here. We've got the S&P 500 pulled back a little bit on the open. It did establish support. We had a nice little bounce off of that low, that 1OP indicator crossing here. We've got a little bit of a bearish cross here. We have an upward sloping trend line that has been breached to the downside. 4 long red candles closing on their low. I would say that right now we should be looking for some day trades on the short side. We use this 1OP indicator to tell us how we should be positioned. Yesterday you could see how the market gapped higher a little bit. Had this beautiful 1OP cross right here. That's the proprietary indicator that we use, only available on Option Stalker. Nice little run right in here. Then we had an upward sloping trend line that we could draw. We also had a nice little price compression here. As soon as we broke down below that, we already had our sell signal. There was a nice little shorting opportunity in here. Long tail under body, bullish hammer, downward sloping trend line violated to the upside. So this cross right here, this bullish cross right in here, was actually a nice long. Continue to stay with the position. Indicator's not doing a whole lot. Didn't get a big dip yesterday afternoon. So this would have been a marginal long in my own opinion, but there was a small opportunity to get long at the close of the day. Here's the bottom line. This is a very low probability trading environment. I know that we've had earnings coming out that typically get some volume going in the market. We've had some mega cap tech stocks announced last week. We've got a number of them on deck. We have an FOMC meeting, and the statement's going to be released tomorrow. It is a complete non-event. What could they possibly say or do that they haven't already done? It's going to be very, very dovish, so we can expect that the Fed is going to be doing all that they can. Haven't even heard anyone talk about the FOMC statement. So normally that would be the focal point for the whole week, but not this week. So we can see here that the market is chopping around. There's not a lot of direction. How do we know that? Because we've got a mixture of red candles and green candles all along. We've got a lot of tails above and under body, which just shows a lack of direction. We also have the high that was tested from Monday, and we backed off of that. So who knows? We'll see if we can poke through. But on a daily chart, you can see there's a long upward sloping trend line that I believe is going to lend support right around the 316 level or so. We'll put the major moving averages up. We'll put the 200-day and the 100-day up. And you can see how that comes into play right around the 304 level on the 200-day moving average. So we've got a couple of support levels. I am bearish, and I'm getting more bearish by the day. I do not like what I'm seeing with the spread of the coronavirus. I don't like the fact that states are retreating. They've gone back to phase 3. In some instances, cities are even considering shutting down. We are going backwards, not forwards. The PPP stimulus that we had about 2 months ago to the tune of $6 trillion, it did fine to kind of bridge the gap, but everyone was expecting a V recovery. So we would spend about a month and a half in shutdown, and then boom, we would be right off to the races, and we would pick up where we left off. That has not happened. And now we could start seeing some credit concerns. I'm seeing that. On the banking side, we had big banks take really big write-downs. That's going to continue. They've also got a zero interest rate environment. It's going to be very hard for them to make money. I think the jobs are going to really struggle. A lot of employers hired their employees back using that PPP money. Now the PPP is starting to run out, and they probably don't have the demand to justify having all these employees on board. The stocks that have rallied are the tech stocks. And I was just reading a report. It said that in the S&P 500, 10 stocks, and they're all tech stocks, have accounted for a 35% rally. They're up 35% on the year. The other 490 stocks in the S&P 500 are down an average of 10% this year. That shows you the disparity. So this rally, this bounce that we've gotten since that low in March has been a handful of really, really, really big tech stocks and not much more. And guess what? Thursday, we've got 4 of those 10 stocks reporting: Facebook, Google, Apple, Amazon. And we've already seen some big tech companies announce earnings: Microsoft, Tesla, Netflix, Intel, all of them down after reporting earnings. I think that the air is seriously going to get let out of the balloon when these tech companies announce Thursday after the close, and I think we're going to see a round of profit taking. There's just not a lot of good stuff going on right now in the market. The economic numbers that came out over the course of the last 2 months were largely because of the PPP and things getting back on track. But if you take a look at where the jobs are, yes, tech does employ quite a few people, but not nearly as many as you have in restaurants, retail, the industrial companies, the energy sector, financial sector. That's where the jobs are. And that is not where we're seeing the recovery. And now we've got, instead of a $6 trillion stimulus plan, which there's not another $6 trillion for the government to throw at this problem, they pretty much threw the kitchen sink at it right out of the gate. They didn't hesitate. Now they're coming up with a $1 trillion package that's going to be haggled back and forth with the Democrats. Maybe it gets to 1.5 trillion. I certainly don't see it getting any more than that. But these provisions and this stimulus is going to be much less than we saw 2 months ago. And you've got 23 million people possibly being evicted from their apartments in October. It's not a good setup. It's not a good situation. So I think that we're going to start seeing the initial jobless claims move higher and higher as employers start running out of the PPP. Last week, initial jobless claims came in at 1.4 million versus 1.3 million expected. I think we're going to start seeing that tick higher and higher. You also have riots throughout the country. You've got the coronavirus spreading, and Congress, oh, they're going to go on recess in a couple of weeks. So the market gets very, very nervous when Washington, D.C. is shut down. Traders tend to take a lot of time off, so we're going to see the volume dry up. Last week, when we had those mega cap tech earnings, we already started to see some selling pressure, and you can see that red bar there, and then the drop on Friday. This was happening when the best of the best were announcing earnings last week. We'll have one more round this week. I believe that this resistance level is going to be pretty firm in here. And if the profit taking starts to come in, you're going to see bullish speculators get flushed out. Well, gee, Pete, I guess that means we're buying puts right now. No, we are not buying puts, at least not on a swing trading basis. When I try and define swing trading, I'm looking at a 1 to 2 week window of horizon and holding period. If you are a swing trader, you don't want to be on the short side because these drops have violent snapback rallies. We don't know what other stimulus could possibly be thrown at the market, but that possibility is always there. On a day trading basis, I certainly think there are going to be some great opportunities to short. But don't despair, swing traders, because once the market does pull in and it does come back and it finds support, I think there's going to be another really nice entry point for us to start selling out of the money bullish put spreads and to get long. But right now, very low probability trading environment. You've got extremely tight trading ranges. You've got low volume currently taking place. I think you're going to start seeing some profit taking. So this is a good time to be sidelined to wait for a better entry point. If you are bearish, you cannot try and short a market that's had a strong rally like this, and we're also in the middle of a 10-year rally. So you need to have confirmation, you need to have technical breakdowns. Excuse me, we'll also be looking for selling late in the day with follow through the next day. Late day selling with follow through the next day and a close on the low the next day and a breach of key technical support levels, once you see that, then you can start considering some short positions, but not until then. So we have to wait for those breakdowns on a swing basis. Again, I think your best play is going to be to wait for that market drop, to wait for support, and then to look to get back into the market. On a shorter term day trading basis, yes, I think there's going to be a shorting opportunity, and I believe that we need to wait for that technical breakdown. Then I'll be more aggressive looking at short positions. So let's see if we can find a couple of shorts today. Let's see if we can find a couple of longs today. I am trading half of my normal size in the morning. I'm trading a quarter of my normal size in the afternoon. I'm trying to take some time off. I don't have any swing trades on right now. I don't have any positions I've got to micromanage or worry about overnight. I highly suggest that you take this same approach. So we're going to go in and let's take a look at the short side, since I think that things are set up a little bit better right now on the short side than the long side. See if there's anything that looks attractive to us. We'll have the market on the right-hand side so we can continue to monitor it. And we're going to go through this list. MMM, 3M, you can see how the company came out with earnings, and it is below the 200-day moving average. The B signifies that the earnings were before the open. So we'll click on a 5-minute chart, and you can see big gap down, and then the stock really hasn't done much of anything. It's got a little bit of a downtrend line here. It's got an uptrend line here. If the market were able to break down, and this upward sloping trend line on a 5-minute basis, right there, which it'll keep creeping higher and higher. If we can break that, I see some relative weakness in the stock, and we've got a market that's starting to come in, then I would consider MMM as a short. TSM has been running hard. It's a stock that I shorted earlier this morning in here. I shorted it in here as well, made some decent money on it, but really not a lot going on. We'll go into the daily chart. You can see this high flyer gapped way up here, and now there's definitely some profit taking. Sellers are taking some chips off the table. I think TSM could actually be a decent one. You can see it came up on the heavy selling search. McDonald's, another earnings stock before the open, not in bad shape. They've actually done pretty well relative to the rest of the restaurant industry. EHTH, that's a pretty nasty chart. There's your earnings right there. Was not able to get through the 100-day moving average. Now has broken through horizontal support. Long red candles closing on their low. Relative weakness. Yeah, I think this stock has more downside in it. Take a look at STM. Nothing too dramatic going on there. SBUX, no trade there until you can get through this horizontal support. So don't see a whole lot in that heavy selling search outside of possibly TSM. And we're going to look at bear run, see if we've got anything in here. Very quiet day so far. Been very tough pickings. And for those of you who are active traders, this is a time when you really want to lay low. You do not want to burn through your capital in a low probability trading environment. Swing traders, be on the sidelines. So I didn't really see anything too attractive on the short side. Maybe TSM will give us a decent opportunity. Maybe 3M will give us a decent opportunity, but that's about it. Well, it's going to be a pretty boring video, I'm sorry to say, but I've got to go with what the market gives me. INSG, we had a number of us trading that this morning. We had a nice horizontal breakout here. This came up on the heavy buying list right in here. I made a little bit of money on this one. Others have stuck with the position longer than I did. They're doing really well on it. TLRY is one that I just traded for a nice gain. And I was long TLRY right in here. I sold on this spike right in here, made a 15-cent gain on an $8 stock. That was a nice little trade. I think it continues to grind higher. On the daily chart, you can see how it's poked through this 100-day moving average, and it's gotten through that horizontal resistance level. So of all the stocks I'm going to show you, I do like TLRY the best for a day trade, possibly hold it overnight as well. Keep taking a look here at the list. LVS made a nice move this morning. Don't see anything really good in here, just bouncing off this horizontal support level. And PRPL looked like it was trying to get going. Little breakout right in here. That's kind of nice. But the stock really hasn't had a lot of impetus behind it since making that early move. So not a whole lot going on there. FTCH. There's another nice little breakout here. You can see that horizontal breakout. Got a little bit of a cup and handle right in here. It's through that high. And you can see how it's been floating higher even with the market down. Here's a 5-minute chart of the S&P 500. Here's what the stock is down. Stock up, up, up. Market down, down, down. This is relative strength. This is when we want to be buying that stock, but we want to wait for this 10P indicator to come into negative territory and cross. Once we have that cross, stocks that have relative strength, that's what we're going to be looking to buy. So still have a little bit more work to do on the downside here. Maybe in the next 15 or 20 minutes, we'll get that bullish cross on that dip right in here. Then I think FTCH works well. I think INSG could work well. I think TLRY could also work well. That's how we do it. That's how we're day trading right now. Kind of a scalper's market, meaning that we don't have very aggressive targets. We have passive targets. We're just looking to get in, make a little money, get out. This keeps us in the game. It keeps us watching stocks so that when those moves do come, we know where to look for strength and weakness. That's all I've got for you today. The primary point I want to make is that this is a low probability trading environment. You should keep all of your trades very, very small. We got that big series of earnings announcements after the close on Thursday. The next week, we're going to get some pretty heavy economic numbers, ISM manufacturing, ISM services. We're going to get the ADP report. We'll get the jobs report on Friday. Once all of this news is out in the course of the next week and a half, we are going into a news vacuum and we'll be in the summer doldrums and things will really quiet down. So try and take some time off because we are going to be gangbuster busy when we come back in September. And it'll be nice for you to just kind of get some rest in now and prepare for what will be a busy fall session. If you like this content, please give it a thumbs up. Make sure to subscribe to my YouTube channel and turn on your notifications so that you never miss any of these videos. If I see something really compelling come up, I may just do a video at any time during the course of the week, but it's going to have to really get my attention. I'm going to really have to like the news. Otherwise, I'm going to try to err on the side of caution, and I'm going to stay in cash. Thanks so much. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.